But let's get into the programs that we currently have available today. So, our first program is our My Home Assistance program. Now, this is our tried and true program. This program is a very unique program because it works with all programs that we have available today. And it also can be used to cover either down payment and or closing costs. It just depends on how you structure the loan. Now, our My Home Assistance program, it's a silent loan on title. So when your client is in this loan, they do not have to make a payment, monthly payments. There's no monthly payments required when your underwriter is qualifying the client. He or she doesn't need to hit the client with a payment on the My Home Assistance program. Now, on My Home Assistance, your client can either borrow 3% or 3.5% of the purchase price or appraised value. That's how you will identify what the loan amount is on the My Home Assistance. It's dependent off of the lower of the purchase price or appraised value. Now, My Home Assistance, it is a loan. It's not a grant and it's not forgivable. So you want to make sure you fully understand that, and you want to make sure that you are communicating this to the borrower. A lot of times, borrowers will get into this type of program, and because they don't have to make a payment, it slips their mind that this is even a loan. But it is a loan. It's a loan that they will eventually have to pay back. And they'll have to pay it back when one of the three items occur. So if they refinance on their first mortgage, they'll have to pay back the My Home Assistance program plus a small portion of accrued interest. If they decide to sell their home, they will have to pay back My Home Assistance plus any accrued interest. Or if they decide to stay in the home, do nothing, and wait 30 years, when they go and make their last payment on that first mortgage, they will have to pay back the My Home Assistance program. Now, I did mention there's a small amount of interest that accrues on the My Home Assistance program. And guess what? It's only at 1% simple interest. So let me give you some numbers to help you put that into perspective. So let's say your client utilized our My Home Assistance program and they borrowed $20,000. How that 1% interest would accrue on that $20,000 loan would be in the first year, it would be $20,200. In the second year, that balance would increase to $20,400 and so on. So it's simple interest, very, very small amount of interest that's accruing on that loan. There's no prepayment penalty. So if your client decided to make payments to the My Home Assistance program, they can and they won't get penalized. They totally can do that. They're not required to because remember, the payments are deferred and it's a silent loan. Now, the unique thing about our My Home Assistance program is it can be combined with any first mortgage. So you would be using our first mortgage interest rates, but if you are qualifying the client on a conventional loan, you're going to follow Fannie Mae Home Ready guidelines. If you're using our FHA first mortgage, you're going to be following the FHA guidelines on that first mortgage. If you have a veteran and you're wanting to do a VA loan, My Home Assistance can be combined with a VA loan. Same with USDA loans. That's a loan for anyone looking to purchase in a rural area. And I know some of you are scratching your head wondering, wait a minute. VA and USDA, they offer 100% financing. Why would I use your My Home Assistance with those two programs? And you would do so to help cover the closing cost on a VA or USDA loan. Keep in mind, my home assistance can be used to cover down payment and or closing costs. It just depends on how you structure the loan. Now, when you are utilizing any of our programs, we allow you to follow their first mortgage conforming loan limits. We don't have a loan limit on my home or a purchase price cap on my home. We allow you to follow the loan limit set by the first mortgage. So, as an example, on a conventional first mortgage, if there are certain counties throughout the state of California where the conforming loan limit will exceed the 766,550 conforming limit. And we're okay with that. Just on a conventional loan, if the loan amount exceeds 766,550, the loan to value on the first mortgage is capped at a 95% CLTV. And a high balance fee is assessed to your client as a closing cost fee. So keep that in mind when you're doing a conventional loan. But if it's a traditional conforming loan limit, you can go up to that 97% loan to value and layer the My Home assistance with that conventional first mortgage. My Home on a conventional VA or USDA is calculated at 3% of the of the purchase price or appraised value, whichever's less. Now on a FHA first mortgage, the My Home Assistance Program will go up to 3.5% of the purchase price or appraised value, whichever's less, because the FHA first mortgage will go up to that 96.5 loan to value. For FHA, if you're purchasing in a high cost area, there is no cap to the loan to value, so that's pretty good. On a VA loan, we did cap the loan amount on a VA transaction to 1.49 million. It's the max of the conforming loan limit. But you're simply going to follow the loan limits per the high cost area counties when you're doing a VA loan. And for a USDA loan, you're following USDA loan limits with those type of mortgages. And the beauty of our programs, because we get it, we know that the cost of living in California is it's expensive. It's high. It's at an all-time high. We get it. So you can layer other down payment assistance programs, other grant programs with our down payment assistance. For the most part, the max combined loan to value of all liens on title would be 105 CLTV, and that's combined loan to value. But you can, and if you are layering other grants or other community seconds with our program, we ask that our liens take a first lien or a priority lien position on title. So please keep that in mind. But our My Home Assistance, it is a loan. It's a silent loan on title that the client doesn't have to make payments, but they will eventually have to pay the loan back should they refinance, decide to sell their property, or at the end of the 30-year term. Your client can combine any money or any gift funds that they have with our My Home Assistance program to offer a larger down payment. This will help with lowering their monthly mortgage payment. So keep those things all in mind. Our next program that we offer is our Cal Plus zero interest program. We often call it our Cal Plus ZIP program. And when this program, when you are looking at this program on our rate sheet, think of this program as built-in closing cost assistance. So with this, There's many ways that you can structure the loan, but you will notice that the Cal Plus Zip program is only available on a conventional first mortgage or an FHA first mortgage. We do not offer the Cal Plus Zip on VA or USDA. Um, and it's built-in closing cost assistance. I think the best way, if you're going to use this program, is to add the My Home Assistance with this program. So you'll have either a conventional first mortgage or an FHA first mortgage, whichever your client qualifies for. But that first mortgage, you'll have that first mortgage and first lien position. Then combining our My Home Assistance program with a Cal Plus Zip would put My Home Assistance in a second lien position. The ZIP program is a third lien on title that's there to cover the client's reoccurring and non-reoccurring closing costs. Now, how do you calculate the loan amount on for the ZIP? You have an option to use either 2% or 3% of the first mortgage to calculate the loan amount for the ZIP. Now, I want to make sure that you are all aware that the more assistance a client needs at Cal HFA, the interest rate on the first mortgage will slightly be higher. So in my first slide, I mainly talked about My Home Assistance being combined with one of a first mortgage. Here, this Cal Plus Zip program is allowing your client to get down payment assistance and closing cost assistance. So that can slightly increase the interest rate on the first mortgage. But the ZIP loan, it has zero interest. So if they need closing cost assistance and they have that third lien on title, the interest is at 0%. So there's no interest accruing on that third lien. The payments are deferred on the ZIP program, but you have to make sure if you're offering this program to the client that that ZIP third lien is strictly used to cover closing costs. It cannot be used to give the borrower cash back in hand. It cannot be used to pay off debt. It is strictly for the closing costs. So that's huge here. But again, if you're using our Cal Plus Zip program and you're combining our My Home Assistance with that program, as an example, with those three liens, your client could roughly get 102% combined loan to value. So that they're getting over 100% financing to help them get their foot in the door to home ownership. And this program can also be layered with other grants and down payment assistance programs that doesn't mind taking a junior lien position behind our liens. So please keep that in mind. But the ZIP loan, it is a loan. It's not a grant and it's not forgivable. If your client refinances on the first mortgage or decides to sell their property, or even at the end of the 30-year term, they will have to pay back the ZIP lien and the My Home Assistance lien if any one of those events occur. But it's strictly it's very similar to how I communicated the My Home Assistance, except for remember, My Home Assistance can be used for down payment and or closing costs. The ZIP lien can only be used for closing costs. Now, I'd like to give you some figures so that you can put this all into perspective so that you can visually see how these programs can help your clients. So here's a scenario that I came up with. Let's say your client comes to you, they're looking to purchase a home. You find that their price point that they qualify for is putting them at a purchase price of $600,000. On an FHA first mortgage with our My Home Assistance program in second lien position, in this scenario, this is how this program can help your client. They are essentially getting 100% financing. So the first base loan amount on an FHA loan would go up to $579,000. Our My Home Assistance program would go up to that 3.5% of the purchase price or appraised value, giving your client a $21,000 second lien on title. Their estimated monthly payment at a 6.5 rate is $4,764. I know this is low, but I estimated the closing costs at 2% of the purchase price, and that came up to $12,000. Let's say that your borrower was able to get a seller credit or a seller concession at 1%. That would help reduce the closing costs that they would have to bring in for closing. Total amount due estimated in this scenario would be 600,000, I'm sorry, $6,000, not $600,000, but borrower would be estimated to bring in $6,000. We often get questions about, well, there's a change with the realtor or the buyer's agent's commission. Can clients use our down payment and closing cost assistance programs to help with paying for that fee? And we often say if that buyer's agent's commission is truly a closing cost and it's something that's disclosed on the closing disclosure as a closing cost, absolutely our down payment and closing cost assistance programs can be used to help absorb some of that cost. Now, it won't pay for everything because, with the purchasing of a home, there's a cost associated all over with the transaction, because on our loans, this is a buyer paid compensation loan. So what the brokers charge on our programs, it affects the origination. It has to be disclosed as origination costs, which affects the closing costs. So if you're adding in title fees and you're taking an aggregate of all those fees, our down payment and closing cost assistance would not cover all fees. But if you combined our assistance with, let's say, a small seller credit, that can help minimize the closing costs for your client purchasing that home.